us broken hearted. So where do we go from here? Yeah. Are you listening, darling? Look what we started. Breaking in half left us broken hearted. So where do we go from here? Take me home, cause I wanna feel like I belong. They relate to all this pain in my past, so they listen to my songs. So let's go back to where it began and where it all started from. Take this chance, one last dance, cause I've been waiting way too long. Take my hand, I wanna show you something. Promise I've been dying to see ya. They say the grass ain't always greener. I guess what they're saying is true. In my dreams, that's where I seen her. Take my heart and take all of me, girl. Let me show you what I wanna do. I wanna spend the rest of my life with you. Are you listening, darling? Look what we started. Breaking in half left us broken hearted. So where do we go from here? Are you listening, darling? Look what we started. Breaking in half left us broken hearted. So where do we go from here? Where do we go from here? Yeah, where do we go from here? Are you listening, darling? Are you listening, darling? Are you listening, darling? Look what we started. Breaking in half left us broken hearted. So where do we go from here?
Hello and welcome back, Team 2. Welcome back, everybody. Welcome back, Team 2. Another live stream. So, it is Thursday, the 12th of September. And as always, we are going to run through the Bitcoin technical analysis. We are going to take a look at what is going on, how I'm positioned, the trades that I'm in, what I'm looking for next, the trades I'm looking for, all of that juicy stuff, of course. So, if that does sound interesting to you, please do smash that thumbs up button. It really helps me out, helps the channel out, and I can continue to bring this content to you. And of course, if you are new to the channel, subscribe and turn that bell notification on so you don't miss any updates. But enough of that. Let's jump straight on into the charts and take a look at what is going on. So we will start off with, first of all, how I'm positioned. So at this moment in time, of course, I am still just very much short on the market. I've only got a short trade open. That is my only trade at this moment in time. The reason being is because we did, in fact, get stopped out of that long trade. So, of course, we did take a long from the range low. That took us all the way up to $65,000, of course. Took some really nice profits on that trade on the move up. So, that was all closed for just a little over $3,000 in a profit. So that was a really, really nice trade. And then, of course, on Tuesday, or the 27th of August at 1:50, I did take a short trade, like I told the team here, taking a small hedge short against the long. This is the short trade that I'm actually currently in right now. So that was all the way up from up here after we trapped all of those what was it, over 160, almost 170 million long trades up there, which were then forced to cover as price was pulling back. So of course, this is when we took advantage of that, entered into that short trade, got this lovely pullback. As you can see here, I have realized a little over $650 in a profit, and we still have $271 unrealized profit in this trade. So kind of just letting the rest of that ride, because of course I am still in fact bearish on Bitcoin. Now I understand, right? We are getting a bit of a pump. But first of all, we have to remember, okay, this pump is only a very small pump in comparison to what the previous pumps that we've had, right? We also have to zoom out, and we have to also acknowledge that Bitcoin is still in this bearish trend. So I still just have to be bearish on Bitcoin at this moment in time. But then if we come more locally, right, we've of course had this smaller bullish structure that formed, which then was broken. Again, we formed bearish structure, which as of right now, we are still in this bearish structure. Okay, we are still in this bearish structure, even though we are getting this pump, right? I'd say, we need to kind of get above $59,800. That's when I can say confidently that, okay, right, we've actually now broken this bearish structure. Okay, and what we can now be viewing, right, is larger time frame bullish structure, which ultimately would be a lot better for us. Okay, it would ultimately be a lot better for us in the long run. Okay, if we were to break this bearish structure, okay, and form some more more bigger bullish market structure. Okay, and why do I say this? Well, of course, we had the bullish structure here, right? It broke. We've got the bearish structure. We've pulled back, but if we can start to form bullish structure from here, okay, of course, this is much larger structure, okay, than we've been forming prior to this, right? With this bullish structure here, this bullish structure here, and then this bullish structure here, and then for the final one, this bullish structure here. So these have been like small periods of bullish structure. But what we can see now is that we're actually forming like some bigger, more bullish structure, in my opinion. Okay, like more larger time frame bullish structure. And of course, we're looking at bearish structure on these higher time frames here. Okay, we are looking at bearish structure. So if we can actually start to form some higher time frame bullish structure, of course, for me, this still wouldn't confirm that we've broken this bearish structure. For me, it would have to be getting above $70,000, but it gives us a higher chance, right? It gives us a higher chance of breaking this large bearish structure that we are in if we're forming more higher time frame bullish structure, because we could see a big pullback here. Maybe we come back down to below 60K, where from there we can get a long trade and we can look to take that up above 70K, which would then, of course, break the larger time frame bearish structure. So this, yes, right, this is the bullish case scenario. This is what we would like to see, okay, to of course, see higher prices, right? This is what we want to see for higher prices. There are some things to be aware of, though. There are still some things to be aware of, and the most obvious is, of course, we're still in the bearish structure. Okay, we're still forming lower highs. So if we do pull back from here, right, there is probably a higher chance, and like where we are now, there's still a higher chance, in my opinion, that we will come down and take this low out. It's not until, okay, like I said, we break above like $69,800. That's when that lower price target for me kind of gets invalidated, and then we can look for higher prices, right? And it's something that we still have to be aware of, right? This lower target is still very much something we have to be aware of, in my opinion, okay? Because, of course, we have this high up here. We know what happens on all of these pumps towards the upside, right? We know how all of these retail traders are getting incredibly bearish on every single pump we see, right? We're seeing it now here. We are seeing an incredible amount of longs actually open up on this move up here. And we're probably going to continue to see an incredible amount of longs open up on the way up, right? If we do continue up. So let's say, right, we come up to $65,000, right? We come up to $65,000. Lots of long trades are opening up here, right? And then we start to pull back slightly. We get the trade entry trigger on the failed auction. Okay, for me, this would be the opportunity to look for a short trade, right? This would be a perfect opportunity to be looking for a short trade because, of course, what have we seen happen before? Well, like 3-4 times before. Okay, well, we have an incredible amount of longs to open up. We start to form some bearish signs and we get a big pullback, right? Why? Because all of these longs get liquidated, right? We saw it here, okay? We saw it here, we saw it here, okay? And we saw it here as well, okay? So we've seen it happen 4 times before, right? We've seen it happen 4 times before, and it's just what the trend has been at this moment in time, okay? So I wouldn't be surprised, right, if we come up, we get millions of trap longs at the high, we form that failed auction, get the trade entry trigger, and we see this big pullback. Now, like I was talking about earlier with this possible bullish structure, right? It doesn't mean, okay, that if we get this short trade from up here, that we then target this low here, okay, or we target the new low, okay, because now, right, things have changed a little bit, right? Things have changed. We're now forming more higher time frame bullish structure, meaning that we could actually look for a higher low to be put in. Okay, we could look for a higher low to be put in for then price to continue up and form another of course, higher high. Okay, and this is when we can be looking for bullish structure to form, to then break that bearish structure, and then maybe from there we can look towards all-time high, right? So this is something to be aware of. This is what I'm going to look for, right? It doesn't necessarily mean I'm bearish on this move up. Okay, it doesn't necessarily. I just want to um, underline that, right? It's not to say, right, if we come up here, I'm bearish. It's just, I'm a trader. I want to take advantage of these moves, exactly like this move here. Unfortunately, I was asleep when we got the when we got the trade entry trigger, right, from down here. But initially, right, I want to be taking advantage of these moves. So for me, it's like, okay, if we get the bearish signs up here, I'm I'm not necessarily looking for price to get a huge dump below like 50k again, right? That's not necessarily what I'm looking for. Yes, okay, price could do that, okay, but what I'm now viewing, okay, is more higher time frame bullish structure. So I'm looking to take advantage of a little bit of a pullback. Maybe I can get a long trade in somewhere here, right? And then I can take that up for a new high. Okay, so that's a possibility. But then, like what I just said a few seconds before, right, there is still that possibility, right, that we can come down to a new low. There is still that possibility, okay? So we do have to be aware of that because that's very much been the trend at the moment, right? We have bullish structure for a new low, bullish structure for a new low, bullish structure for a new low, bullish structure for a new low. There's a high chance, right? This is why I still believe, okay, as long as we're in this bearish structure, we can go to a new low because that has been the trend, right? That just has been the trend. So I don't think anyone can argue that that has been the trend, and that's kind of what we can look for next. Now, of course, right, there is that possibility that we invalidate that. Yes, I understand that, and I know where my level of invalidation is. Okay, and in the position that I'm in at this moment in time, it's like, okay, right, I could be wrong. I wouldn't class it as being wrong. I just class it as more being it being invalidated, right? The reason being is because, right, I've shorted. I've had an amazing short trade from up here, right? Again, the team knows, right? I gave the setup to the team in the Discord, of course, as well. Yeah, amazing short from here. We've had an amazing pullback, right? So we cannot be wrong here because we've realized what $651 in a profit. We've moved the stop loss to entry, right? So now there's just no reason to there's no way that we can be wrong in this scenario, right? Now what I'm looking at is, like I said, right, we're in that bearish structure. So for me, as long as we're in the bearish structure, I'm happy to say we can go down to a new low. But then I get that invalidation, okay? Is like, if like we break this bearish structure, okay, I can actually start to look for higher prices from here. Okay, I can start to look for higher prices because then we're forming possibly larger time frame bullish structure. Okay, and this is when, of course, my stop loss is at entry on the trade anyway. So if we come up and we stop out the short trade, that's fine. Okay, I cemented $651 in a profit, but I could, right, if we're breaking that bearish structure to bullish structure, I could actually close the trade there and say, right, okay, I'm happy to just take this profit here. Okay, so yeah, for me, it's like it's just patience from where we are, just waiting for major levels. At this moment in time, I don't believe there is a trade to have had. Okay, the long trade, of course, was from down here that we had been planning for this long trade for quite some time. I had been talking about it from this naked point of control at 52,874. But yeah, like I explained, right, I was asleep at that time, so there was physically no way I could have taken that trade, which is fine, right? It's fine to miss a trade here and there. If you're asleep, okay, we're only human. We have to rest, right? But like I say, a lot of the time, it's okay to miss a trade here and there if you're asleep, but if you miss like 5 trades in a row because you're off doing something you shouldn't be, that's when you need to sit yourself down and think, right, okay, I need to start focusing on the charts a little bit more because I've missed 5 trades in a row, and that's getting a little bit yeah, lazy, to be honest with you. So yeah, for me, it's like, okay, right, I would have loved to be in this trade, right, but unfortunately I was asleep, so I cannot take the trade. So for me, like, looking at this here, the 3 best trades that you could be in my opinion, of course, right, is this one. For the three best and the only, okay, the only trades in my opinion would have been this long from here, this short from here, and then this long from here. Anywhere in between there, for me, absolutely no trade. I'm not interested in trading any of these levels in between whatsoever. And yeah, okay, we've seen a lot of retail. Okay, we've seen a lot of retail long this move up here. We've seen a lot of retail long this move up here already. Okay, and for me, I don't care, right? Yes, we can look at this as being bullish, right? Because we're seeing price increase, positive deltas building. We can see open interests increasing over time. So yes, this is a bullish rise, but I am not going to trade like a retail trader and give into the FOMO, because we understand what retail traders, what retail traders' win rates are like. Okay, 95% of the time they lose. Okay, and 95% of the time they completely wipe out their account in the first like 3 months, right? So I do not want to trade like those people, right? I do not want to trade like the sheep. Okay, so I'm looking at entering into the trades, right, when I can see either a huge portion of the market has been wrecked or a huge portion of the market is trapped. Okay, this is when I'm looking for. Okay, and using this analogy, right, I only see, okay, looking in this price action here, I only see 3 trades that could have been taken, right? Which is, of course, the long that we took here, the short that we took here, and then that long that we planned for. Okay, those are the only 3 trades that I'd seen. Okay, in this. Okay, anywhere here, not looking at shorting. Anywhere here, not looking at longing. Right? For me, that is FOMO. Right? If you're entering into shorts anywhere here, it's all FOMO. Longs anywhere, here, it's all FOMO. Right? So for me, okay, where we are now, right? Yes, we're pumping. Okay, yes, we could actually, if we break this bearish structure here, we can actually look for higher prices. Am I going to long that? Absolutely not. Why? Because I'm giving into FOMO then, and then that takes me back to 2 years ago when I traded like a retail trader, when I traded like a sheep, and I consistently lost money in the markets. Right? So I'm going to stay very, very clear from that. I know that the trade was from down here. Okay, I admitted to myself that I've missed the trade. So I look for the next best trade setup. I'm not going to FOMO into the long trade, right? Because I understand that is going to get me wrecked very, very quickly. Okay, so not FOMOing into that, right? I understand where my next levels of interest are. Okay, first of all, is 65,000 approximately. Right, we've talked about that. Right, we can look for price to come up. Millions of longs opening up on the way up here. Right, millions of longs opening up on this breakout, as they would like to call it. Right, we then start to see price pull back. We get millions of trap longs at the high. Okay, for me, this is the perfect time to look for a short trade, and we can look for a pullback. Right, then we're talking about what I talked about at the start, right? We're not necessarily looking for this pullback to come all the way down to the low. Okay, what are we now doing possibly? Okay, we're now actually forming bullish, like higher time frame bullish structure, right? We can then look for a higher low, so we could actually be looking for a long trade possibly down here, okay, to take that up for a new high. Okay, maybe we break this larger time frame bearish structure, okay, and then from there we can possibly ride the trade to all-time high or close to all-time high. Okay, so for me, right, yeah, missed a trade, fine, but I understand, right, that there are going to be thousands of more trades in the future, and we're not far away from a new trade. I do not believe. Okay, we're not far away from a new trade coming up here. Okay, I would love to look for a short trade up here. Okay, on the pullback here, if we're showing some bullish signs here, I would love to look for a long trade there. Okay, so that's kind of like one scenario that I'm looking at. That's like more of the bullish scenario. Now, let's say that we stay and we remain in this bearish structure and we continue lower, right? Again, okay, that will be the bearish scenario. But for me, it would actually flip into a bullish scenario temporarily, of course, okay, because we would still very much be in the bearish structure, but temporarily be a bullish case scenario. Why? Because we could pull back. Okay, we could see a huge portion of the market getting wrecked on this move back. Why? Because we've got loads of longs opened up from down here. We've had millions of longs open up from here. Okay, so if we start to pull back, we're going to see a huge long squeeze. Okay, and we could see a huge portion of the market getting stopped out. Price then starts to rise forming a failed auction of the range low. We know what has happened. What is it? 3 times before? 1, 2, yeah, 3 times before. Okay, off of the failed auction of range low. 1, 2, 3. Okay, we've seen a huge move towards the upside, right? So that's kind of what I would be looking for down here. Okay, I would be looking for a long trade down here to then take that up. Okay, not necessarily to all-time high, not necessarily up to $65,000. Okay, because again, in this scenario, we have to remember, what is price doing? Well, price is making consistent lower highs, right, and consistent lower lows. Bearish structure. Okay, so we can actually look for this bearish structure to continue. So we see price rise. Okay, we can actually look for a short trade up here to take that down for a new low. Right, that's kind of another scenario that I have planned out as well. Right now, I'm not sure which scenario is going to play out. Don't really care which scenario plays out. All I'm going to do is trade whatever scenario does play out. Okay, so for instance, we come up here, we get the short trade set up. I take the short, okay, and I look for the long. Right, that's how I will play it. Vice versa. Okay, we come down here, I will look for the long. Okay, we come up here, I look for the short. Okay, that's how I play it. Right, these are the scenarios that I can see playing out. Right. Do we know which one's going to play out? No, absolutely not. Okay. Would any of them play out? Possibly not, right? Maybe we see price pull back here and we just dump all the way down to $47,000. Okay. That's still a possibility. So we may not see that even play out. Okay. So yeah. Okay. There's another scenario. Again, from here, we could just see price smash through this, come up to 70K, no short trade from there. That, I guess that's another scenario. Yes. Okay. Or we could just consolidate from here, right? These are other scenarios that we can be looking at. Okay, but I'm only interested in the scenarios that I can trade, right? And I know the scenarios that I can trade, right? Well, first of all, I'm in a short trade right now. Okay, still in this short trade. So if we dump from here and we continue to dump, great, I can take advantage of this, right? If we rise, we continue to rise. Okay, great, fine. We look for a trade higher prices. Unfortunately, I'm not taking advantage of this because, like I said, I was asleep when the trade setup was there. Okay, so yeah, not really too those yeah, not really too interested, right? Don't really care. Okay, of course, yeah, it'll be nice because I'm still in that short trade. If we just continue lower, great. Okay, but I know, right, that the next trades that I'm looking for are these scenarios. Okay, the scenarios with the next trades I'm looking to take are the scenarios that I need to be aware of and I need to be looking out for, right? Okay, and this is what I would be looking for, right? Price coming up here for the short, then possibly for the long trade, right? We may not get the long trade, okay? We may not get the long trade. However it plays out, I'm just going to trade, right, what I see, what I see the charts telling me, okay? We're pulling back here. Huge portion of the market gets wiped out. We show some strength. Fine. Looking for that long trade for then a short trade, okay? Those are the scenarios that I'm interested in trading. Okay, like I said, if we pull back from here, great. I'm in that short trade. If we just pump and we continue to pump, okay, fine. Right, I look for a trade at higher prices. Yeah, I missed that. I missed that long trade. It's fine. So yeah, again, like I say a lot of the time, I just like to draw out the scenarios, and then it's literally patience. Okay, patience. Wait for those levels, those key levels to be tapped. Once those key levels are tapped, then you take action. Okay, then you take action. You come, of course, into the order flow. You take a look at what's going on. Have we got a huge portion of the market getting wrecked? Have we got an incredible amount of trap traders? Right? Are we seeing big players absorb shorts or absorb long trades? Okay, whatever it may be, the order flow can tell us that. Okay, and then of course we're looking for the trade entry trigger, which is when we come back over to trading view. We look for that trade entry trigger. Once we get that trade entry trigger, and as soon as we see that, we take that. Okay, because we understand that price may not wait around at that level for us for that long. Okay. Perfect examples here, right? After we entered into that long trade from here, price did not revisit it. Okay, even with a short trade here, right? We entered into the short, price still has not revisited when we entered into that short trade. So you have a small window to get into that trade. So once you see that setup, you have to take that setup. Okay, if you wait, if you wait and you're procrastinating and you're having second thoughts about the trade, you have to ignore all of that. You have to get rid of all of that, okay? Because you can miss the window of the trade. It's like yeah, for example, with this one here, right? I was asleep. I woke up in the morning, okay, and we were still like down here, right? We were still down here, okay, but I'd missed the entry on the trade. I'd missed the best possible entry on the trade, which would have been from a bit lower, okay. And for me, because I wasn't awake at that time, I missed that move, okay. And what's price done? Okay, price hasn't what has price not done? Okay, well, it hasn't revisited that entry point that we were looking at. Okay, it hasn't revisited it. So you have to once you see the entry, you have to take it. Okay, you can't be second thinking. Okay, because price may not spend a lot of time there. I understand, right? Some trades that I enter into, okay, yeah, we may play around with the entry for a little bit and then we dump. Okay, you see that sometimes, but again, in these scenarios, right, this is three perfect scenarios right here where you've had the trade entry trigger, okay, and price has not revisited the entry. Okay, we've just moved away from the entry, okay, and we haven't revisited. Right, so you cannot sit and second think anything. Once you see the trade, okay, once you see everything aligned in the order flow, right, everything aligns. You see big players absorbing shorts, longs. You see a huge chunk of the market getting wrecked. You see trap traders, whatever it may be. Okay, you then see the trade entry trigger. You take that trade. Okay, there's no, like I said, there's no second thinking. You take it when you see it, because yeah, if you didn't take it when you saw it here, or you didn't take it when you saw it here, guess what? Okay, you wouldn't have got that entry. Why? Because price moved away. Again, price moved away here as well. Price moved away. Okay, and we haven't revisited that price. So it's very, very important. And I understand, right? I've been in that scenario before, where I've second guessed. Okay, you have to have confidence, of course, coming into a trade. Not over, you don't want to be overly confident, right? Because that's when you start to wreck your account, because you're over leveraging yourself or over exposing yourself to the trade. Okay, but you want to be confident in that trade, and a big part of confidence in trading is, of course, trading with an amount that you're okay at, okay losing, right? So if you're risking $100 on a trade and you're happy to lose $100, then you're of course going to be more confident in that trade, because you don't really care if you lose that $100. Whereas if you're trading with if you're risking $1,000, and that's a lot of money to you, and that's going to affect you quite heavily, then yeah, you're going to be a little bit less confident. Why? Because you're going to be really worried, and focusing on, if this trade is a loss, this is really, really going to emotionally affect me. Okay, so it's about, of course, risk management, very, very important, and that will really, really help with the confidence. Okay, so yeah, it's exactly like me, right? As soon as I see the trade and I like it, everything's aligning, I get a trade entry trigger, it all looks good, I take the trade as soon as possible. Why? Because I have my risk management in check. I'm confident in my strategy. I'm confident in myself. Okay, and that's how I do it. That's how I get rid of all of the emotions that come in when you're entering into a trade. I understand, like, it's kind of almost like there's a million people sat behind you when you're looking at that trading desk, and you're about to press that button. Okay, it's like a million eyes are looking at you, and you've just got the whole world planted on your shoulder, right? I've had that feeling until this day. Okay, there's still a bit of a feeling of like, okay, I'm putting money on the line here, I'm risking it. It does creep in sometimes. I don't let it affect me. I don't let it affect my trades at all. Okay, it's something that, of course, you have to get past, and it's a big thing. Like, I'm sure there are a lot of people out there who have the capabilities of becoming a consistently profitable trader, but they just cannot get past that emotional aspect of it, and getting rid of the emotions and actually having confidence in themselves, right? And maybe they do have confidence in themselves, okay, but as soon as they get a losing trade, their confidence is knocked, okay, completely knocked. And then the next trade, right, they're second guessing themselves, because they lost the previous trade, but then that trade plays out, and then they're kicking themselves again because they're like, oh, I should have taken that trade. For me, it's like, I've got a strategy. I know what it is. Okay. Well, I've got a few strategies. I combine them all together. I'm confident in the strategy because I've back tested it. Okay. I've been trading this strategy for over a year and a half, almost 2 years now. Okay. And, prior to that, I back tested it, dating back years. Okay. And as long as you're confident in the strategy and you know that the strategy is successful, then it's all about getting that risk management in check, pushing the emotions aside. I understand, okay, yes, you're gonna have emotions. Till this day, I'm it's probably a little bit, you could say, like a weakness of mine. I still do get emotional in trades sometimes. Do I let it affect the trades though? That's the difference, right? I don't let it affect the trades. If we're sat around at entry for a while, we're spending a lot of time at entry. I'm saying to myself, oh, is this actually really going to play out? Should I just close it now at a break even? But no, I don't do that. I don't. I have those like thoughts, but I kind of like push them aside and ignore them and say no. I know what my rules are. I know that if I enter into a trade and I like it, I like the setup, everything's aligning. Okay, then I leave it. I leave it. If I take a loss, fine. Okay, but I'm confident and I know that my strategy over time is going to give me results. Okay, so yeah, it's a lot of things. It's a lot of things. Just even if you have a strategy that works for you, it doesn't guarantee you success. And that's what a lot of people do not get in these markets. There's no magic sauce. If there is any magic sauce, or I wouldn't really call it magic sauce, more like an X-ray machine, okay, for candles, like an X-ray machine for a human body, is like order flow. Okay, it gives you a really, really good understanding of what's actually going on, what buyers and sellers are actually doing. But other than that, there's no real secret sauce, right? There's no secret strategy. It's just having a good understanding of the markets. That's it. It's like I said, there's no secret strategy that works every single time, or even like 90 or 80% of the time. There's no secret strategy. It's literally, even how the trades that I take, it's not a secret strategy that works 80 to 70 to 80% of the time. Okay, yes, it is that, but it's more than that. I see it as it's having an understanding of the markets, right? Again, a huge chunk of the strategy, if you want to call it that I use, okay, is looking at the order flow. It is looking at what the retail traders are doing or what the institutions are doing. Okay, I want to see when retail traders are trapped. I want to see when retail traders are getting wrecked. I want to see when big players have buy limit orders or sell limit orders. That's what I want to see. This is where order flow comes in and helps me with that. And yeah, I guess you can call that the secret sauce, right? But that gives me an understanding of why the markets are moving. It gives me an understanding of why Bitcoin's pumping. It gives me an understanding of why Bitcoin is dumping. Okay, it gives me that understanding. Okay, but at the same time, right, it predetermines, okay, when price is going to dump or when price is going to pump. Okay, it helps me anticipate price movements, right? Perfect example, over 160 million long trades opened up here. What did price do? It started to pull back, right? Like, logically, can those long trades, okay, remain in their positions? Absolutely not. So for me, I'm thinking, okay, this is bearish. Now I've got a trade entry trigger here with the failed auction. Right, this is the perfect time to short. Why? Because all of these longs that are up here are underwater. They're fearful, they're emotional. They're probably going to cover, or they're going to get liquidated because they're over leveraged or overexposed to the market. Okay, what is that going to cause? Right, well, long covering, okay, which is what it's called when longs close, is longs selling into the market. What's that going to do? It's going to push the market down, right? So exactly like I said, it's not a secret. Like it's not really. I wouldn't really call it a strategy. It's just having an understanding of why price moves. That's all it is. An understanding of why price moves and what moves price. Okay, that's what it is. If you understand why price is moving and what is moving price and that, then you're gonna be able to anticipate moves. Okay, you're gonna be able to anticipate moves. This whole move down was fueled by all of these long trades getting wrecked. Okay, this little move up, okay, I can tell you has been fueled by new long trades coming in. Right, this move up here, new long trades coming in. This move up here, new long trades coming in. This move here, all of those long trades getting wrecked. Okay, having an understanding of why price moves gives you the ability to anticipate when price is going to move to what direction. Okay, so for me, it's like I said, no secret strategy or anything. It's just having an understanding of why price moves. If someone says they have a secret strategy that gives you an 80%, 90% win rate, I do not believe them. Okay, it's exactly like I've seen a huge uptick in what you call it, this ICT strategy and this smart money concepts, all of this nonsense, which they have the idea, they have the right idea, but they're not executing it correctly. And I reckon a lot of those people who trade this ICT smart money concept type bollocks, I reckon a lot of them could do quite well if they actually understood why price moved. Okay. And the only way to do that is looking at the order flow, looking at the X-ray machine of the candles. Okay. That's the only way to view it. Right. So all of these magic secret strategies, it's a guessing game. It's literally a guessing game. Whereas if you're looking at this, I don't see it as this is not gambling. This is not I feel like all strategies out there, secret strategies, whatever they call them, it's all gambling. It's all guessing. It's just a guessing game, right? But when you look at the order flow and you understand why price is moving, it's not guessing. It's actually looking at the reason why price is moving. Like simply put, it's it's being the house, right? It's literally being the house. The probabilities are in your favor because if you understand why price is moving, okay, then you can have a good understanding of, or you have you have the ability to anticipate when price is going to move, okay? Because when you know why price is moving, okay, then you can look for these patterns, right? You can look for, okay, right, just before price moved, what happened? What was happening? Oh, we were seeing, loads of short trades open up at a low, but price started to rise. Okay, again, right? This would be short covering. Short covering is shorts buying back into the market. That's not going to dump price, is it? No, that's going to pump price. Why? Because they're buying back into the market, right? So it's all logical, and it's all real reasons, right? No breakouts of triangle patterns, right? No breakouts of head and shoulders patterns. No, or I hear it a lot, fair value gap type nonsense, right? It's all just nothing. It's all just nothing in the air, right? It means nothing, absolutely nothing. But having an understanding of the markets is crucial. I could, right? I could solely look at order flow and trade using order flow and not have to use any. This is what we call like retail trading charts, okay, like candlesticks, right? I could solely use this to trade, okay, and I could trade the exact same way as I do now, okay, because this is all I need, right? If I could only choose one platform to do my analysis on, it would be something like ExoCharts, which of course is just order flow, right? Why? Because it's all you need. It's all I need, right? The reason why I use TradingView is because it just makes it easier for me. It's just more like simpler to look at. It's nicer to look at. Where this is like a little bit messy, and on the web version you can't draw any analysis on it, but on the desktop version you can. But yeah, trading view is just like an easier way to look at it. It's just yeah, easy to the eye, as I would say. But yeah, like this is all just retail trading, like trading charts, right? And any retail traders that solely look at this, it's yeah, it's for me, it's yeah, I find it hard to understand. I find it hard to believe they have a good understanding of how the markets work. But as soon as you look at this and you put the time and effort into understand this, then you know why price is moving. I can just make it easy. We'll go on the 12-hour, look at a really good example. Okay, right. This move down was an amazing example because we had 500 million long trades getting wrecked on this move down. How do I know that no shorts? Well, when I say no shorts, okay, of course shorts opened, but like a very minuscule amount. When I'm saying like no shorts or no longs opening, it's not that no shorts are opening or no longs, because of course we are going to see some shorts and some longs opening, but it means just like a minuscule amount are opening. So yeah, I should say it like that. So a minuscule amount of shorts have opened up on this move down, and the reason why I know that, okay, and I know that this move down, right, it's a huge move down, right, all the way up from 70k all the way down to yeah, $48,900. That's a bloody big move, right? And I can tell you now, a very minuscule amount of shorts opened up here. This was fueled by longs getting stopped. How do I know? Okay, well, we can zoom in. We can look at this. We of course know price is dumping. Okay, but looking at the open interest is decreasing over time. Money flowing out of the market, right? We zoom in a little bit more. We can see negative delta is building. But this negative delta is paired with open interest decreasing, right? What does this tell us? Okay, this tells us longs are closing, right? It's not new shorts opening, right? If we want to see new shorts opening, we'd have to see open interest in the green, okay? Open interest rising, right? So this is completely fueled by longs getting stopped out, right? Having a good understanding of this, right, can help you take advantage of it. Okay, why? Okay, because then you're then looking for the long trades, right? So you're looking right here. It's not great here because XO only shows you on the web version anyway. Only shows you a certain amount of price action because it gives you so much information. On the desktop version, it gives you a little bit more, to look at. But here, yeah, price was all the way from wherever we were, like 53,000 roughly. Okay, so we were all the way down here at like 53,000. This move up here, okay, open interest had increased. Okay, it had increased from, if I can remember, it was around, I'm going to call it around 800 million. I feel like it was a little bit lower than 800 million. Okay, but we ended with open interest at 1.2 billion. Okay, so we know, right, open interest has increased as prices increased, right? And what's building? Positive delta is building, right? So we know that this is longs opening, right? So open interest has increased over time, positive delta building. This is longs opening, right? Yes, we can see lots of negative delta here. Okay, but what is this, right? Well, we actually know that this is longs taking profit. How do we know this is longs taking profit? Because we're seeing, right, negative delta, so sells into the market. We're seeing open interest decrease, money flowing out of the market. So this is longs closing, right? But we're at a high, we're at a peak here. Okay, so longs shouldn't be getting stopped out, should they? Right, we're at a high. Well, this is because longs are closing, but they're not getting wrecked. They're actually taking profits. And then you can see prices pulling back. Yeah, okay, a bit of shorts opening up. Then we start to see some longs getting wrecked. How do we know? Well, because 46 million negative delta, open interest is decreasing, price is decreasing. Okay, so we know that this, okay, right, longs are now getting wrecked a little bit. And here, right, we can see new longs opening up, right? New longs opening up to a high here. I didn't take this short trade, but there was a short trade set up from here. Why? Because simply put, we had millions upon millions of longs opening up at the high here. To be specific, we had at this high, like 135 million long trades open up. Okay, price pulled back, stopped all of those out. Where did it dump price to? It dumped price into more long trades that have opened up. And that's where you can kind of just expect a big long squeeze, right? A big long squeeze. And that's exactly what happened. Okay, so once you understand how this all works, then you can have a good understanding of why price moves. Okay, and then when you understand why price moves, you can anticipate price movements. Very simple. Very simple, but very well. I say it's simple. I know it looks really daunting, and yeah, okay, it's going to take some time to fully understand it, because this is just like this is kind of, yeah, it's kind of what I look at the majority of the time. But there are other things to be a little bit aware of, and it can at times get a little bit more complicated. But to be honest, like, this is kind of the bulk of it that I would say anyway. This is like the bulk of it. This is like the real important stuff. And yeah, understanding that gives you a good understanding of why price moves. So then you can anticipate these moves. It's it's really nice to see. And I used to I still do say this a lot, right? Retail traders, they always blame the big players, okay, for chasing their stop loss or whatever it may be. And you even see like these big influencers say, "Oh, I got stop hunted," or whatever it is. It's a bunch of nonsense. Okay, they have the right to trade in this market, and okay, yeah, right. Maybe they manipulate the market, but they manipulate the market ever so slightly, like ever so slightly. But that is enough to then push that first domino over, which of course is like the FOMO late traders, okay, which then push them into like less FOMO traders, who then do the same thing and then push price into less FOMO, and it just like that causes that domino effect, right? That we see. Perfect example here. 500 million longs got stopped out. Okay, it was longs getting stopped into longs, who then get stopped, pushing price down into longs, that then get stopped, pushing price down into longs. It's just that huge domino effect, huge domino effect. It's like, it's not the institution or the big trader that caused that big dump. Okay, yeah, maybe they started it. You can argue they started it, yeah. But what you have to think is like the retail trader who has entered into a FOMO long. First of all, they've entered into a terrible long trade as it is, because they're just entering into a trade for FOMO. There's no real reasoning behind the trade. It's FOMO. Okay. So that's where retail traders have gone wrong, first of all. Okay. And then, they're not taking profits, right? Then they're not, taking profits on the trade. Okay. And then, of course, okay, the institution steps in because they have a right to trade. They move the market ever so slightly, and all of the retail traders go absolutely mental, absolutely mental. Okay, they don't know what to do. Okay, price moves. All right, price is pumping. Okay, price moves ever so slightly towards the downside, and it's the end of the world. They all get stopped out. Okay, and then of course smashing price down into more longs that just get stopped out, pushing price down into more longs that gets. It's just that domino effect, and this is what I say a lot of the time, right? It's retail traders that really do move the markets, okay? Because retail traders have they there's more money in the markets that is held by retail traders than there is than by institutions, okay? Yeah, okay, there's these institutions are trading with a lot of money, okay? But if you add up, okay, all of the institutions, right, or just like, to be more specific, right? If you were, and we don't know this for a fact, right? We don't know this for a fact, but we kind of do. It's kind of just logic, right? Here, right, there was very clear absorption up here. Why? Because millions upon millions of longs were coming in and price failed to go higher, right? So there was a big sell limit order here, right? There was a very big sell limit order. But that trader, okay, that trader there who's entered into that big sell trade is a much smaller position, okay, than all of these long trades that had opened up here. Okay, a much smaller position. Okay, because of course, they're only absorbing, right, the last little bit of that pump, right? They're only absorbing this when those longs become a little bit exhausted. Okay, then they've absorbed they've absorbed them all, and then there's no more longs to come in, so price pulls back. So the retail traders have a bigger piece of the pie, right? They have more money in the markets combined than the institutions do, right? So the retail traders, if they're all doing the same thing, okay, then they're going to move the market a lot more than the institutions are, okay? Because again, the retail traders combined have more money than the institutions do, right? And the retail traders are going to, if they're all doing the same thing and they all get wrecked at the same time, they're all going to move the market much more than an institution would. Okay. And this is what they don't realize. This is what retail traders do not understand. Okay. They think the institutions are out there to get them. They think the institutions are manipulating the market. Okay, yes, right. Maybe they are the catalyst, right? They start the move. Okay. Ever so slightly, yes. But then it's the retail traders' fault because they just go into extreme fear, okay, and extremely emotional, right? And then they just cause this here, right? They cause this. This was all caused by retail traders, right? From $70,000 to $48,900. That there was on Bybit alone, 500 million longs getting stopped out. Imagine you combined all of the exchanges together. Okay, and the amount of long trades that got stopped out there. It's an incredible amount. And it was all retail traders. It was all retail traders getting stopped out. The institutions took advantage of it, yes. Right? Because again, they're looking at, right? I can guarantee you institutions are looking at maybe not exo charts, right? But they're looking at some sort of order flow, right? They're looking at some sort of order flow like this. Right, I can tell you for a fact that they are. I can tell you for a fact that they are. I met someone who worked at Barclays. Okay, Barclays Bank, and of course, they invest millions upon millions upon millions of pounds here in the UK, dollars, and they say on the stock market, okay, they use some sort of order flow. Okay, it may not look exactly like this, it may not be this, right? But they said that the guy that I met said they use some sort of order flow. Yes, because that's how you have an understanding. That's how you have a grasp of how the markets work. It's like Paul Tudor Jones. He used order flow as well. Was it advanced as it was back? Was it as advanced as it is now than it was back then? No. Okay, it wasn't advanced back then, right? But they still had some sort of order flow then, and he made a killing in the markets by understanding how markets work, understanding what the retail traders are doing, and then doing the complete opposite. Okay, that is how you understand how the markets work. Who's ready for the breakout traders to return? Exactly. That's what I'm looking for, right? Price to pump up here, get the short trade from up here. Of course, we have to see the setup, and then we look for price to pull back. So yeah, let's see if we do get the breakout traders coming in here, because that could offer us a really nice short trade. All the retail traders looking at the INHS, they are going to chase these green candles on the pump. Exactly. We're seeing it already. They're already chasing this. They're already doing it. So yeah, this is why I'm not giving into FOMO. I'm not doing what they're doing whatsoever. But yeah, I think I'm going to end that there. I will leave that there. I know I've blabbered on for quite some time, but it's all important stuff. I can tell you, it's all important stuff. I've been live for almost an hour now, so I'm gonna end it there. Sorry, it's quite quick. I have again got someone waiting on me, so yeah, I'm gonna have to rush off. So yeah, I hope you guys all enjoyed this. I hope you gained some value. A little bit different today because nothing has really changed in the market, so I just thought I'd talk about the things that are important in these markets. So yeah, I will leave that there. Have a lovely rest of your day, guys. If you haven't already, please make sure you smash that thumbs up button, and of course subscribe as well if you are new to the channel. And yeah, I will see you tomorrow for the next live stream. And of course, any visionary members, I will see you over on the Discord. If you want that, it's the first link in the description, or the second link is the free Discord. So yeah, have a lovely rest of your day, guys, and I will see you later. Goodbye.
Take me home, cause I wanna feel like I belong. They relate to all this pain in my past, so they